Hey, Carl. Venture capital deal flow staying strong through the pandemic. It shattered a record in the third quarter, and it's on pace for an all-time high this year. New data from PitchBook and the National Association of Venture Capitalists shows deal activity topping $82 billion in the third quarter. That brings the total to more than $238 billion this year, and money was spread across almost 13,000 deals. The year-to-date value is already 40% above the record set last year. And as far as drivers, guys, the big one here was mega deals. Those are really the norm at this point. Those worth at least $100 million made up half of the deals inked this year. That total has roughly doubled from last year. Another factor, participation from some less traditional backers. Mutual funds, private equity, hedge funds as well are increasingly dipping into this asset class. Most of them are getting into that later growth stage, which is adding to the size and to the value of these deals. And more than 2/3 of the money spent on these deals came from deals where those non-traditional investors were involved. The bigger funds continue to dominate this funding landscape, but the report also highlights LPs, so those pension funds, endowments, and others potentially at the upper limits of what they can actually allocate to this asset class. So fundraising could plateau in the coming quarters. Enterprise tech was by far the biggest sector. More than half of the deal value went to that sector, and followed by consumer tech and then fintech. And finally, geography. The Bay Area and New York are still dominating. New York's share of deals grew slightly year over year. Bay Area, Silicon Valley was still number one with more than half of all fundraising activity. Julia.